The auto industry is trembling more than ever after Stellantis shocked everyone by slashing prices by as much as 60%. This isn't your normal sale. These days, some used models of trucks and SUVs cost more than brand new ones. The industry is being completely upended by the ripple effect. But why is Stellantis doing this? What's the catch? And how will it affect customers? Sellers and rivals keep an eye on things because this alters everything. Bold moves are nothing new in the automotive industry, but Stellantis has completely changed the game by slashing prices by as much as 60%. These cuts are not minor adjustments. Rather, the company is rewriting the industry's rules. In addition to clearing inventory, they are revolutionary. It's not a dream to walk into a dealership and see a brand new pickup truck for almost half of what it would have cost only a year ago. The new reality is it's Stellantis. Stellantis, like many other manufacturers, is facing increasing pressure to clear its lot of unsold inventory due to overproduction. With rows of unused trucks and SUVs accumulating, the company is choosing a daring solution. Shocking cost cuts intended to draw in customers who might have been putting off purchases. This action aims to create a ripple effect that could change the automotive market for consumers, not to tweak the edges. This announcement presents exceptional prospects. Once out of reach for many, trucks and SUVs are now within reach, giving consumers the opportunity to purchase premium cars at previously unheard of prices. As Stellantis launches this bold strategy, the reward for keeping an eye on this market shift could be a once-in-a-lifetime deal. The key question is how these reductions will affect its entire lineup and which models are being trimmed. For example, the Ram 1500, a workhorse pickup truck that has long been a mainstay of Stellantis' lineup, is now offered for less than half of its original price. Yes, you did hear that right. The iconic Ram pickups, Dodge Durango, and some Jeep models are among the vehicles that will benefit from these price reductions. Stellantis isn't saving its savings for slow-moving or unpopular models of trucks, SUVs, or even some of the most sought-after trims. Previously priced at $50,000 or more, these vehicles are now available for less than $20,000. For those who have been eyeing a new truck or SUV, the opportunity to upgrade has never been better. While some discounts are restricted to particular trims or model years, even top-tier options like Ram's luxurious limited trim or Jeep's Trailhawk editions are seeing reductions. This isn't a marketing gimmick or a fleeing sale, a company-wide shift to move metal and revitalize sales for buyers. The reward is clear access to premium vehicles at prices that were previously unthinkable. This all-encompassing approach guarantees that buyers of all price ranges, from entry-level work trucks to expensive luxury SUVs, will benefit. But what's even more fascinating is how Stellantis is pressuring dealerships to turn this vision into a reality. Stellantis isn't merely offering discounts, it is enforcing them with an iron fist. Stellantis has adopted a different strategy to guarantee that buyers benefit from these price reductions. Historically, manufacturers have left pricing decisions to dealerships, which has led to inconsistent deals and occasionally customer annoyance. The company is putting unprecedented pressure on its dealerships to comply, and for some dealerships, this compliance is non-negotiable. As an example that it will not tolerate pricing games, Stellantis has already revoked franchise agreements from a number of underperforming or non-compliant dealerships. In one extreme instance, dealerships in the state of Washington were forced to close their doors after failing to meet Stellantis' new standards. These closures convey a very clear idea: the discounts are genuine, and any dealer who tries to avoid them will be held accountable. Transparency is the benefit for purchasers. No more haggling or unstated costs. Stellantis is attempting to guarantee that the prices it advertises are what you pay for dealerships that are prepared to cooperate. This tactic also has advantages, as Stellantis offers financial rewards for swift vehicle movement. The manufacturer and dealerships' recently discovered alignment is setting the stage for customers to believe in the advertised discounts, as Stellantis assumes control of its pricing narrative has a significant impact on customers by making the car buying process simpler and more equitable. But why is Stellantis acting so aggressively at this point? Time is of the essence, particularly in the automotive industry, so Stellantis' choice to introduce these discounts at the beginning of the year was not an accident. With unsold inventory from 2022 and 2023 clogging, the first quarter is a crucial time for manufacturers because it sets the tone for the remainder of the fiscal year. Many of the discounts are time-sensitive because Stellantis is committed to starting over in 2025. Stellantis understands that every day a car goes unsold, its value decreases even more, so it aggressively lowers prices. The company is not only drawing in customers, but also making room for its 2025 models. The urgency is that genuine cars from prior years are being offered at 50–60% off, but these discounts won't be available to buyers indefinitely, creating a window of opportunity. Imagine being able to purchase a top-tier Ram or Jeep for less than the base models used to cost. The savings extend beyond the initial purchase price. Additional benefits of purchasing at such discounted rates include lower financing costs and insurance premiums. Stellantis' revolutionary price reductions are upending the car buying rules. But as the automotive industry adapts to this seismic change, they are also upending the competition. The market's ripple effects are already being felt widely. Imagine a single decision that upends an entire industry. When Stellantis announced historic price cuts of up to 60%, they didn't just lower prices. They detonated a pricing bomb that is making competitors reevaluate everything. Automobile manufacturers like Ford and General Motors, long regarded as untouchable, were collectively gasped by the automotive market. The giants were abruptly forced to explain why, as Stellantis not only undercut their prices, but also fundamentally altered what consumers would be willing to pay for years to come. The perception of quality associated with their high sticker prices allowed competitors to flourish. Stellantis has turned this idea on its head by demonstrating that high-end trucks can be sold for a fraction of the price without compromising value. Previously, a truck valued at $80,000 was more than just a vehicle. It was a statement. Customers are now in control and enjoying deals they previously believed were unattainable because of this move, which has forced Ford and GM to face an uncomfortable reality. They must either follow Stellantis's lead or risk falling behind. Stellantis's gamble isn't just a win for their customers. It serves as a wake-up call for the whole industry, and as Stellantis upends the market for new trucks, their audacious plan has an additional effect: an unanticipated collapse of the used truck market. What happens when new trucks start to cost less than their used counterparts? Prior to Stellantis price reductions, the used truck market was a goldmine, where vehicles held their value for years and frequently sold for near their original prices. However, the current market is very different. Why would someone spend $35,000 on a 5-year-old truck when they can get a brand new model for $25,000? The market is collapsing, and prices are falling more quickly than sellers can react. This is a nightmare for sellers. Imagine holding onto a truck you believed was a wise investment, only to have its value drop by 40% in a matter of months. On the other hand, buyers are taking advantage of the fact that trucks that were previously out of reach are now reasonably priced, allowing first-time purchasers and shoppers on a tight budget to own vehicles they never would have imagined. Dealerships that primarily sell used cars are finding it more difficult to move inventory as a result of the trickle-down effects. Vehicles sit on the lot longer, increasing expenses and decreasing profits. In response, many are providing even steeper discounts. The used truck market collapse is your golden ticket if you're a first-time truck owner or looking to upgrade on a budget. Deals like these don't come around very often, and Stellantis has made it possible. However, the used market isn't the only industry feeling the heat. Stellantis' pricing revolution is forcing dealerships to reevaluate how they run, igniting a new chapter in the car buying process. The days of haggling with dealerships are over because Stellantis is changing the rules. Dealerships have long had the upper hand in negotiations and frequently added hefty markups to cars under the pretense of market adjustments. Buyers came in expecting a fight, but Stellantis is flipping that dynamic on its head by enforcing strict pricing policies that guarantee what you see is what you pay. For Stellantis customers, this is a new reality. Walking into a dealership and finding a truck priced exactly as advertised is not a gimmick. These policies not only shield buyers from exorbitant prices, but also level the playing field among dealerships. Customers in small towns receive the same discounts as those in large cities, restoring a sense of justice that has been lacking for many years. Dealerships that oppose these modifications are discovering this the hard way. Dealers who did not comply had their franchise agreements revoked by Stellantis, demonstrating their seriousness. This makes a strong statement. Customers now enjoy a hassle-free experience with clear pricing and fewer headaches. Adjust to the new era of transparency, or risk losing your place in the market. Stellantis has eliminated uncertainty, making the car buying process easier and more pleasurable. However, the company's audacious actions are paving the way for a much more significant change in the automotive sector. The reaction of the industry to Stellantis' audacious gamble. The cost of Stellantis cuts are a challenge to all automakers worldwide, not just a tactic Ford. As Stellantis carries out its audacious plan, General Motors and even Toyota are closely monitoring the situation. Historically, these businesses have maintained high prices by relying on perceived value and brand loyalty. But Stellantis has destroyed that illusion, with 60% price reductions on the table. Now, these rivals must choose between matching Stellantis and risking their profit margins, or continuing and losing clients. The ripple effects go beyond pricing. Automakers are reconsidering everything from marketing campaigns to production plans. The main focus is increasing efficiency, as manufacturers look for ways to reduce expenses without sacrificing quality and focusing more on retaining customers by providing loyalty programs, extended warranties, and bonus incentives to deter buyers. But Stellantis has one more secret weapon. By putting money into electric and hybrid models, they are staying ahead of regulatory changes and appealing to environmentally conscious consumers. Customers now have more options as competitors struggle to match Stellantis' prices while keeping up with their technological advancements, improved costs, and a more promising future for auto ownership. When all is said and done, consumers stand to gain the most from Stellantis' gamble, which is igniting a revolution. the automotive sector must deal with a new reality. How will this affect car purchasing in the future? Stellantis has drawn a line in the sand, and the race to adapt is only getting started. Things become even more intriguing at that point. Imagine owning a truck that is both powerful and environmentally friendly. Stellantis is making that a reality and revolutionizing the automotive industry as a whole with the rise of hybrid and electric alternatives. Stricter environmental laws and changing consumer priorities have caused the demand for hybrid and electric cars to soar in recent years. Stellantis has embraced this challenge by making significant investments in electric and hybrid alternatives for their best-selling models. Their Ram and Jeep models now come with fully electric and plug-in hybrid options to appeal to a growing market of buyers who care about the environment. Stellantis is moving toward electrification to stay ahead of the curve by providing reasonably priced hybrid and electric trucks alongside their gas-powered counterparts, not just to comply with regulations. Stellantis has established itself as a pioneer in the shift to environmentally friendly transportation, so that consumers don't have to compromise between efficiency and sustainability. This innovation is working, as hybrid and electric trucks are attracting younger consumers and those wishing to reduce their long-term fuel expenses. The cost of Stellantis cuts have only accelerated this trend, embracing electric and hybrid solutions to make cutting-edge technology more widely available than ever. Customers can now enjoy cutting-edge technology without breaking the bank thanks to Stellantis paving the way for a cleaner, more efficient future. But what does this change mean for conventional gas-powered vehicles? As Stellantis pushes forward with electrification, it's having a domino effect that is changing the priorities of the industry. The effect on gas-powered cars. Are gas-powered trucks about to go extinct? Stellantis' audacious approach implies that even though they are embracing electrification, they may not be eschewing their roots. Gas-powered trucks continue to be a mainstay of their lineup, particularly in markets where the uptake of hybrid and electric vehicles is slower. However, the advent of affordable electric options has created a new dynamic that forces gas-powered models to compete like never before. Stellantis has improved its gas-powered vehicles with modern features, updated engines, and improved fuel efficiency in order to stay competitive. In order to keep these models appealing to traditionalists and people living in places with inadequate charging infrastructure, they have also implemented aggressive pricing for them. The end result is gas-powered trucks that are more capable and reasonably priced than before, but this dual strategy has drawbacks. Dealers must manage inventory to satisfy both forward-thinking customers and those who value the dependability of tried-and-true gas engines, while rivals are rushing to stay competitive by either increasing their own consumer electrification efforts or doubling down on traditional vehicles. The contest is mutually beneficial. Which do you prefer, electric or gas hybrid? Stellantis' approach strikes a balance between tradition and innovation to guarantee that there is a truck that meets your needs and budget. Another unanticipated effect that is developing in the background is the change in the way cars are sold and marketed, which is changing the marketing, the playbook. What if purchasing a car involved more than just transactions? Everyone's attention is being drawn to Stellantis' rewriting of the marketing rulebook. Stellantis is adopting a different strategy, concentrating on storytelling and using their price reductions and new models to craft a narrative that appeals to buyers. Traditionally, automakers relied on simple advertising that highlighted the features, offered a competitive price, and let the dealerships handle the rest. Direct engagement has proven to be one of their most successful tactics. Stellantis has increased its social media presence and is interacting with customers through live Q&A sessions, behind-the-scenes content, and real-time promotions updates. This openness fosters trust and informs customers, particularly in a time when they expect authenticity. Additionally, by collaborating with automotive experts and regular truck enthusiasts, Stellantis has leveraged the power of influencers and community leaders to reach audiences that traditional advertisements might overlook. These partnerships frequently feature real-world scenarios, such as urban commutes and off-road adventures, demonstrating Stellantis' adaptability. With Stellantis' creative marketing, consumers are no longer passive participants in the automobile purchasing process. Instead, they feel informed, empowered, and a part of a company that respects their opinions as marketing changes. Stellantis is also changing the actual locations where cars are purchased, indicating a significant change in dealership culture and transforming the dealership experience. Picture entering a dealership and finding exactly what you need without having to worry about haggling or stress. Stellantis is bringing that vision of reality to life. The days of dealerships setting terms and raising prices are long gone. Stellantis has imposed stringent pricing controls to guarantee that consumers always receive fair prices regardless of where they shop. This change goes beyond a simple policy modification. By requiring transparent pricing, it redefines the dealership. experience. Customers can now shop with confidence knowing they're getting a good deal without having to haggle thanks to Stellantis, which gets rid of the games that have long frustrated customers. This strategy is especially appealing to younger consumers who prefer convenience and clarity over conventional sales tactics. Stellantis is also bridging the gap between digital and in-person experiences by offering dealerships contemporary conveniences like virtual showrooms that allow customers to view cars from home and online test drive scheduling. For dealers, the process is as easy as placing an online order because some dealerships even provide home delivery. These modifications present both opportunities and challenges. Those who embrace Stellantis' vision are prospering, while those who oppose the change run the risk of losing their franchise contracts. Stellantis is making a very clear statement. Buyers can now finally take advantage of a stress-free, transparent, and contemporary automobile purchasing experience. Otherwise, they risk falling behind. With their dealerships changing, Stellantis is demonstrating that dealerships don't have to be intimidating. They can be empowering. Stellantis is paving the way for a time when purchasing a car will be quicker, more equitable, and more inventive than in the past. But what does this portend for the long-term direction of the sector? You might be surprised by the responses and the impact on rivals. The price of Stellantis is daring. The decision to reduce prices by as much as 60% has sent shockwaves through the automotive industry, dismantling traditional pricing norms from competitors such as Ford. Cuts are not just shaking the table, they are completely flipping it, forcing competitors to make dramatic moves in order to keep up and redefining the experience of purchasing a car. Both General Motors and Toyota are currently confronted with a challenge that has never been seen before. For many years, these companies have relied on their reputations. Stellantis has set a new standard by demonstrating that high-quality automobiles can be sold at prices that are shockingly low without compromising on their dependability. This is a testament to the fact that innovation and consistent demand are necessary to justify premium pricing. Dealers are rushing to implement aggressive pricing strategies, offering substantial rebates, attractive trade-in bonuses, and extended warranties in an effort to entice buyers back into their showrooms. Ford and General Motors are already scrambling to respond to the situation. For a long time, Toyota has been praised for its dependability and longevity. In order to reduce expenses and maintain its position in the race, the company is putting more emphasis on production efficiency. The impact of this goes beyond simple pricing, as competitors are radically rethinking their marketing approaches. Brands that are accustomed to commanding top dollar are reevaluating their pricing strategies in order to avoid falling behind in a marketplace that is undergoing rapid change, putting an emphasis on cutting-edge innovation, sustainability, and efficiency in order to make up for lost ground acquired by customers. This seismic shift is creating a buyer market that has never been seen before, where not only are there a lot of deals, but there is also a wider variety of options than ever before. Trucks, SUVs, and sedans are becoming more accessible to a wider audience, and buyers can now anticipate top-tier features at entry-level prices. Perhaps the most intriguing ripple effect is the question of how Stellantis' strategy will shape the market for used cars, and how these price changes will affect both markets. Used inventory is devalued as a result of cuts, or will they spark a race among pre-owned dealers to lower their prices and compete with one another? A price war that is reshaping the entire automotive landscape has been started by Stellantis, leaving competitors scrambling and consumers reaping the rewards of affordability and value in the used car market. If you are interested in purchasing a used car, you should know that Stellantis has started this price war. In possession of a pre-owned truck, prepare yourself. Stellantis price reductions are bringing down resale values at a rate that is significantly faster than anyone anticipated. The used car market has long been a haven for people who are looking to save money on vehicles. However, the phenomenon of massive price reductions on new inventory has caused this dynamic to be disrupted. When you can purchase a brand new truck for less than the cost of a slightly used one, the appeal of pre-owned vehicles decreases significantly. As a result, dealerships that specialize in used vehicles are experiencing a significant decrease in sales. Many dealerships are overstocked with inventory that they are unable to move at profitable prices. The timing couldn't be worse for private sellers, as potential customers are now flocking to dealerships that are offering discounted new models. For truck owners who are looking to sell their vehicles, private sellers are also having trouble attracting buyers. The value of vehicles that were purchased in recent years, particularly during the periods of inflated pricing that occurred in 2020 and 2021, is rapidly decreasing. Trucks that were once considered to be worth a lot are now depreciating at record rates. While this shift is a problem for sellers, it presents an incredible opportunity for buyers. Stellantis' strategy is also transforming how automobiles are financed, which is redefining the auto industry. Used trucks are more affordable than they have ever been, and savvy shoppers can take advantage of steep discounts to purchase high-quality vehicles at low prices. However, the used car market is not the only sector that is feeling the impact of this strategy. Stellantis is making this a reality by providing financing options that allow you to finance a new truck with payments that are lower than what you would expect for a used model. Pricing that is affordable has a significant impact on auto financing, as trucks are now selling for up to 60% less than their previous prices. This has resulted in a significant reduction in monthly payments, which has made brand new automobiles accessible to a wider audience. Buyers who had previously refrained from entering the market due to high interest rates or ballooning loan terms are now re-entering the market with renewed confidence. Banks and credit unions are also adapting to the fact that financial institutions are introducing innovative loan packages that are tailored to Stellantis discounted prices and shorter loan terms. The landscape of financing is undergoing significant transformations, some of which include the introduction of 0% interest rates and increased approval rates for buyers with moderate credit scores. However, the advantages are not limited to individual purchasers. Commercial fleets that rely on affordable financing to upgrade their vehicles are seizing the opportunity to expand their operations. For example, construction companies and delivery services are among the industries that are taking advantage of Stellantis's price reductions in order to upgrade their fleets and increase their productivity. When financing costs are lower, an increase in savings in your pocket, whether you are a first-time buyer or a business owner, Stellantis's strategy is making it easier to drive away in a new vehicle without experiencing financial strain, as Stellantis reshapes pricing and financing. The larger question that faces the automotive industry is what the future holds for the industry as a whole. Stellantis is not only changing the game, it is rewriting the rules. However, what does this mean for the future of driving? Stellantis is providing a glimpse into the future of the automotive industry. An important turning point has occurred in the automotive industry. A new standard of affordability has been established as a result of Stellantis' aggressive strategy. The stage is being set for a future in which value and sustainability will take precedence over luxury and exclusivity, and innovation and transparency are being established as competitors scramble to adapt to the new environment. The widespread use of hybrid and electric vehicles is one sector that is on the verge of undergoing significant change. Stellantis has demonstrated that pricing these models in a competitive manner can hasten the transition to greener modes of transportation. Meanwhile, autonomous driving technology is becoming more accessible, which holds the promise of redefining how we experience the world. Another significant development in the field of mobility is the incorporation of digital ecosystems into automobiles. Stellantis and its rivals are making investments in connected car technology, which provide drivers with the ability to access real-time updates, remote diagnostics, and advanced safety features. The car of the future is not merely a means of transportation. Rather, it is a consumer-oriented electronic device that is mounted on wheels. The future of the automotive market appears to be brighter than it has ever been, with decreases in prices. In order to ensure that everyone is able to take advantage of the benefits of modern driving, cutting-edge technology, and a commitment to sustainability are required. Stellantis cost amount. The cuts have caused shockwaves to travel throughout the industry, which has created opportunities as well as challenges for purchasers. When it comes to sellers and manufacturers alike, what are your thoughts on their strategy? Will it alter the way you approach the process of purchasing your next vehicle? Please share your thoughts with us in the comments section below, and thank you for watching.